Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome back to the Contractors Profit Hack Show. I'm Jeremy Lott with Foundation Accounting and Consulting, and we are working on tracking numbers, specifically for the purpose of scaling without going broke. Right? There are certain numbers that we can track that will help us to understand the health of our company. And the first and most important number in your business that you can track is your gross profit margin. All right? Now, gross profit is your total revenue minus your total on the truck costs. And that gives you your gross profit, which is a dollar amount, right? Well, we want to turn that into a ratio so that we can decide how well we're doing, right? So when we're looking at gross profit margin, the equation for that, well, we'll get into that in a second. First, I want to tell another story. And in this story, it's when I was in high school. And at our high school, we had a special needs program. And there were a lot of special needs students that came there to our high school and that would be able to interact with us during lunch and passing time and those kind of things, right? And it was super fun. It was great to get to know all of these men and women, boys and girls, I guess. I don't know. And to be able to interact with them and make friends with them, right? And what I really wanted was to, well, there was this girl named Cosette. And Cosette, when she got home from school every day, would start at number 1 on her speed dial list. And for those of you that are younger than the dial phones, we used to have something called speed dials, right? Where you could program somebody's number into a button on your phone. So you didn't have to remember their number and dial their number. You just press the number 1 or 2 or 3, right? Well, she had gone through and prioritized things, and she had her list, and number 1 was her best buddy, and then on down throughout the list, however many pre-programmed numbers she had, I don't remember. But I was super excited because I had made this list. I was one of the people that Cosette would eventually call every day right after school. And so my friends and I that were friends with her would compete and argue over who was going to be number 1 on her dial list, on her speed dial, because she would change them all the time, right? And it took a long time, but eventually my friend Colin Dean, who was a year younger than me, he got bumped from the list because he did something to make Cosette upset. And that meant that I was moved up to number 1. I was number 1 on her speed dial list, right? So the reason that I bring that up is because we want to prioritize the different numbers on our profit and loss. And the number one priority, as we've already mentioned, is gross profit, right? The reason that gross profit is the number one priority is because nothing will determine the health of the business more than your gross profit margin. Okay? The reason that is because our gross profit margin tells us if the way that we're doing the work can be supported, if it's viable, right? If we have a higher gross profit margin, then that means that our bidding and estimating is on point. Our producing of the work is on point, right? And so we have the potential to make money, right? Then we have our hill, our selling, general, and admin expenses. And there is a volume required to get over that hill, right? But the better our profit margin, the better our rate. I want to rewind really quickly about how we use the gross profit margin in determining our break even and those type of things, right? So the way that we use it is that we think about traveling for 100 miles at 50 miles per hour, right? We take the 100 miles, which is the distance that we need to travel, and we divide it by how fast we're going, which is 50 miles per hour, and that gives us 2 hours, right? At 50 miles per hour, it will take us 2 hours to go 100 miles. We can do the other direction too, and we can say that we're only traveling 25 miles, so our distance is 25. We're still going 50 miles per hour, so the rate's still the same. Now we're going to take 25 and divide it by 50, and that's going to give us half an hour, right? So the half hour is how long it's going to take us to go 25 miles when we are driving 50 miles per hour. We use our gross profit margin and the size of our hill the same way. The size of our hill is the distance that we have to travel, right? Yeah, we use a dollar amount, but it is the distance that we have to travel in order to break even, right? And the gross profit margin tells us how fast we're going over that hill. So if we have a 50% gross profit margin and we're going over this hill, we're going to get over that hill a lot faster than if we have a 30% or a 20% gross profit margin, right? We're going faster. 50 is higher than 30 or 20, right? So we're going faster over that hill. And so because of that, the break even, the total amount that we need to sell for the year is going to be much lower, right? So back to the gross profit margin and let's look at how it's calculated, right? With the gross profit margin, what we are going to do is we are going to start with our gross profit, the dollar amount, right? And we're going to put the gross profit margin on, or the gross profit dollar amount on top. On bottom, we're going to put our sales, our total sales for that period, right? So on top, we have our gross profit. On bottom, we have our sales, right? So now if we're looking at that, which number do we want to pick as our champion? Do we want a higher gross profit or do we want higher revenue, The answer is gross profit. We want gross profit to be higher. Okay? If gross profit is our champion and it's on top, that means that we want our result to be a higher number. The higher we can get our gross profit margin, the better it is, because we have a faster rate of going over our hill, which means we're going to break even faster. And then once we break even, we're going to make profit at a faster rate than we would with a lower number. Okay? Hopefully that makes sense and I didn't lose you guys. Gross profit margin, number one, most important. It gives us the understanding immediately of if you are producing at a rate to be able to sustain your business. If you're not, we have to rewind and go back all the way to step one, which is fuel your profits. And we need to focus on your estimating strategy and how to estimate so that you are profitable on every job, right? So hopefully that helps you out. Track your gross profit margin, know where you're at. Total sales minus total costs on the truck costs gives you gross profit. Gross profit divided by revenue gives you gross profit margin. So I know that's a lot of numbers, but hopefully I've kept it simple enough for us to be able to understand. Thank you very much for listening. And next, we're going to talk about days in accounts receivable. That's our next ratio that we're going to talk about. So thank you very much. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.